Hi, I'm Jennifer Simpson. I'm one of the members of the corporate team at BBM Solicitors. Today I'm going to talk a little bit about preparing your business for sale. Many clients find selling a business to be one of the more stressful experiences, but like a lot of stressful experiences in life, with preparation and advanced organisation, the whole process can be slightly more seamless. One of the first things a prospective buyer your business is going to do is undertake a due diligence exercise. You're likely to find yourself faced with an extensive questionnaire asking you in detail about all aspects of your business. Knowing in advance what this questionnaire is likely to cover allows you to improve and work on aspects of your business that you're going to be questioned on. The big issues that tend to come up in diligence are litigation issues. Look at your business's litigation history. Are there any claims by former employees? Are there any large debt recovery actions? Or are there any compliance issues or letters issued to you by government departments? Try and address and rectify these or settle any ongoing litigations before marketing your business. The further in the past of a business history these cases are, the less likely they are to worry a potential purchaser. Also take a look at your business's contracts. Have you been issuing terms of engagement to your main customers? Have you got signed contracts with your main suppliers? Or is everything on an informal, unwritten handshake basis? You may find that if you haven't got signed documents, what you're actually effectively able to sell is quite limited. When considering putting signed contracts in place, also consider the transfer provisions in these contracts. What's going to happen to these contracts if there's a change of ownership in their business? Will your customer or supplier still be bound by the contracts? Also have a look at your employment practices. As businesses grow over time, it can be easy to lapse into a situation where you do not issue formal employment contracts, or certainly do not go through a process where you keep these signed and adequately recorded for all members of staff. You may want to consider doing a contractual review, checking that each staff member has a contract in place and you're clear of the terms of that contract and any adjustments that have been made to it over the years. Also be clear in each staff member's holiday entitlement, hours of work and rights to salary increases if any. Also take a look at your firm's debt recovery and cash flow processes. Have you got methods where your customers are used to paying on their 15 or their 30-day terms? If I'm looking at the books of a business, a potential buyer sees customers not paying until day 60, day 70 or even day 100, they may be concerned that cash flow in their new business will be challenging and it may need additional sources of funding. If you can try and get your customers into good payment practices by using structured debt recovery methods in advance of marketing the business for sale, this will be helpful. Aside from that, it's also important to look at your company's governance. What are the formation documents of your company? Do you have a shareholders agreement in place? Consider the terms of that. Is it still relevant? Are all the current shareholders involved in the agreement? What do the provisions of the shareholder agreement say about the transfer of the business? Are there drag and tag provisions? Are minority shareholders going to be able to easily block a deal if you secure a potential purchaser that you're significantly interested in progressing with? What do the company articles of association say? Do these tie in with your expectations of how a transfer of shares would work? And do they tie in with the provisions of your shareholders agreement? All of this is worth considering. The time to put a new shareholders agreement or new articles of association in place is certainly before you have a potential buyer looking at your every move. Also look at your company's filing record. Nothing is more off-putting for a potential buyer than a company who has frequently filed late or failed to file annual returns. It suggests a company that's run in a disorganised and haphazard manner. Take a look at your company books. Have they been correctly written up? Are your annual returns accurate when they're being submitted each year? Do you have share certificates? Are you going to have to create indemnities for lost share certificates? It's worth checking all these so when you're handing over a set of company books to a potential buyer, they're in a clean and usable condition. Also consider your business's property issues. Are the main properties operated by the business owned by the business, or are they owned personally and let on an informal basis? If your business rents its commercial property, What sort of expiry periods are left on the leases? What are the assignation provisions in the leases? If there's a transfer of control, will this need to be renegotiated? If the business premises and where it is operated from is a big part of the goodwill and customer experience for the business, consider having strong property rights in place so you have something more tangible to sell. Also consider your business's intellectual property. You may have been trading for a long time and have informal intellectual property rights, but your business may seem more attractive to a potential purchaser if these rights are registered. Registering a trademark is not necessarily an expensive process, and you can take advice on this from us. Finally, consider your tax issues. Is all your tax paid up to date? Is the VAT position well recorded and accurate? No purchaser is going to want to take on a company with large pending tax liabilities, so make sure your books are in order and take accountancy advice about the timing and potential of any sale to see if things should be restructured in the run-up to the potential marketing of the company. Selling a company needn't be hard or onerous, but it's always better to speak to your accountants and your solicitors in advance in anticipation of any sale to make sure your house is in order. Please don't hesitate to contact myself or another member of the BBM corporate team if you'd like to discuss anything further.